Hello friends, my name is Afar. In this video I will show you the best company to for your insurance. But first of all I will tell you the definition of insurance, why you need it, and now let's start the video. Life insurance is a contract between an policy holder and an insurer where the insurance agree to pay a designated beneficiary a sum of money, the death benefit, upon the death of the insured person. Life insurance is one of the most important types of insurance to have. It helps financially protect your family in event of your death. Life insurance can be used to help pay for final expenses like funeral cost and outstanding debt. It can also provide your family with money to live on if you are the primary breadwinner. There are different types of life insurance policies, but they all have one common goal: to give your loved ones financial security after you are gone. The most basic type of life insurance is called term life insurance. This type of policy provides coverage for a set of period of time, typically 10 to 20 or 30 years. If you die during the terms of the policy, your beneficiary will receive the death benefit. If you live to the end of the term, the policy will expire and you will not receive the death benefits. Another type of life insurance is whole life insurance. This type of policy does not expire after a set of periods of time like terms life insurance. As long as you continue to pay the premium, the policy will remain in force. Whole life insurance also has a cash value component, which means that the policy builds up cash value over time. You can borrow against the cash value of your policy, or even surrender the policy for its cash value. It's essential that you choose the right type of life insurance for your needs. You should also make sure that you are getting the best possible rate of on your life insurance policy. Okay, there is many things to understand, but below is a short explanation of the words and first you will encounter in your insurance policy. First of all, premium. This is the price you will pay per week, month, or another set of periods. Beneficiary, the individuals who will receive the financial benefit when the insured dies. Okay. Okay. Policyholder, this is a person who bought the policy. It's usually the insured. For example, if I purchase 30,000 insurance on myself and name my children as beneficiaries, I am both a policyholder and insured. I If I obtain 20,000 policy on my spouse, I become the policyholder while she becomes the insured. Okay, the policyholder has the option to cancel and change the beneficiaries on the insurance. The insured does not have this legal right unless they are the policyholder. This is crucial information. So can someone buy a life insurance policy on you and you have a legal authority to change it? It is okay. When someone purchases a life insurance policy on you in New York, they might usually have your consent by signing a form. Expectations to this rule as small policies taken out on spouses, usually 15,000 or less, and children under the age of 15. If you do not give, if you did not give your consent and found out about the policy after it was purchased, you would then need to take extra legal measures. Cash value. The cash value of whole life insurance policy is the money you have available to loan out. You can spend this cash value from your already paid premium. However, taking out this money is not advisable unless it is extreme financial emergency. Okay, there is some term that you should know. This kind of coverage has a set duration of 10, 20, or 30 years, and then it ends. In New York, the term is until you are 18 years old and then it expires. What does this imply? To expire means that your insurance will no longer be available after the term ends. The issue is that once your term is end, you meet the requirement for additional coverage. It will be whole life or permanent insurance, at which point your rate will be higher because you are many decades older. When you first bought your insurance, you were healthy and fit. However, during the 20, 30, or 40 years of your life, you have acquired a condition that the insurance carries considered insurable. This might be diabetes, cancer, or stroke. You cannot get any more insurance now because you are still alive. Guess what? The insurance company does not refund your premium. Instead, it keeps all of your money since it has insured you for so long. You are out of luck now. That is how it works. Whole life insurance. The insurance is guaranteed for the rest of your life. It never terminated. The policy price does not change, so it will not rise as your age. The face value of your policy will not alter. It also acquire value in the form of cash. As a result, parts of your premium payouts goes toward a saving account for you to use when you want it. Also, whenever you need money, you may borrow it from yourself. More on this later. So, why would anybody choose just term over this whole? Many people choose term insurance over whole life insurance because it is cheaper. R2 R250,000 policy cost only 25 per month, while the entire life would be 25 per week. Both whole life insurance and term insurance have their advantage, which make them more useful in different ways. For example, if you have 300,000 mortgage that will last for 30 years, you could get a 30,000 term policy covering you for the same 30 years. That's why if something happened to you during the period your family can use money from the policy to pay off the mortgage and keep the house safe. Okay, I think that's all for today. I hope you understand main thing, the main points about insurance. So let me next video. Take care.